Trump 2.0 has officially started. Let's look at the damage. Meanwhile, the Philippine markets remain lackluster, but there could be some positive signs. Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. On Monday, President Trump signed a series of orders marking the start of his presidency with a bold display of authority aimed at dramatically reversing key policies of the Biden administration. This wave of executive actions, targeted key areas of climate and immigration. Additionally, the orders reinstated core elements of Trump's agenda, including expanding drilling and mining on natural resources and significantly altering the United States position as a haven for refugees and immigrants. As we expected last week, this boosted the AAII bullish sentiment from 25.4% the previous week to a whopping 43.4% this week, bucking the historical average of 37.6%. Now, the U.S. markets celebrated these America First policies, I would say, as the S&P 500 pushed to new all-time highs last Thursday, with the index gaining almost 2%, but ended the week back at 61.01. The red candle last Friday could signal a possible mean reversion this week before continuing the upward move. The Fed meeting will be on Wednesday this week in an earnings week where 6 of the Mag 7 stocks will be reporting, so watch out for some surprises and increased volatility. Midweek, Trump announced the Stargate joint venture, a collaboration with major players like SoftBank, OpenAI, and Oracle. Surprisingly, Microsoft isn't in the picture. Now, this joint venture is aimed at advancing artificial intelligence in the US. Ironically, the initiative is set to rely on power sources that Trump deprioritized during his first day actions. Classic Trump. This, of course, bumped the Nvidia stock price back into contention to retest all-time highs. It failed to sustain at $153. Later in the week, he fulfilled 2 key promises to the crypto community. He initiated the formation of a specialized task force to develop clear guidelines for the digital assets industry, and he also imposed a ban on the creation of central bank digital currencies. On Thursday, Trump said he'd rather not put tariffs on China, which is a softening stance that eased some fears over the potential for a trade war. Of course, China stocks rose after the remarks in a Fox interview. Back home, it looks like we are going to miss our GDP targets, again blaming it on the rain, as storms that hit the country late in October and mid-November were significant enough to offset the typical surge in economic activity ahead of the holiday season. But as we look forward to 2025, 78% of Philippine CEOs expect domestic growth in the next 12 months. Now, this survey was taken last October to November. Now, 38% of respondents said that they are very confident about revenue growth. Equal number, 38%, are modestly confident, right? And 59% of these CEOs plan to expand headcount in the next 2 months, which is higher than the 42% average. Along with the CEO confidence, ABN AMRO projects Philippines to grow by 6.3% this year, the second fastest in Southeast Asia. And the drivers for growth are consumer spending and exports. Looking at the dollar exchange graph, the peso strengthened against the dollar last week. The peso closed at 58.30 after a sharp drop last Friday, hitting some resistance along the 58.80 level. What's happening here is the dollar weakening because the DXY fell 1.8% last week. The dollar actually broke out of this range, reaching almost 110 before pulling back last week to retest the breakout level at 107.2. Is the dollar going to hold this support? If we look at this chart, history suggests it may break, because if we look at the historical data of the dollar index during Trump's last presidency back in 2016, it has so far closely tracked the current movement of the DXY, and this could potentially follow the same pattern. But we'll see. Another reason why the peso appreciated against the dollar is the strength of the Philippine 10-year yields, as the bond yields have recently surged to 6.379 before retreating to 6.25 last Friday. I'm not sure what's causing the 10-year yields to go up, because if we look at this chart, this shows the green line indicating rate cuts by the BSP. Now, there is a resistance in the market as we see the 10-year yields and the BSP rate cuts diverge. Now, usually, this divergence is caused by expectations of inflationary pressures and other economic risks, despite the BSP implementing rate cuts to maintain lower borrowing costs. Now, this also further indicates that monetary easing alone may not suffice to stimulate economic activity, because as bond yields rise, it directly affects borrowing costs for businesses and consumers. Potentially, this could dampen the intended impact of lower policy rates. Maybe this is why the Philippines was the worst performing index last week, along with the Indian, the Japanese, and the Singapore markets. Now, let's look at the charts. The index was actually close to ending the week on a positive note, if not for Friday's poor performance. The PSEi dropped 1.3% last Friday to end the week at 6,296. Now, this week, there's not much to report, because as the market continues to consolidate within this same range. But if we look at the bigger picture, what's happening right now is that this marks the first significant consolidation in a while, hinting that a potential bottom might finally be forming. If we draw the trend lines though, see, the price action still remains in a downward trajectory. The index really isn't out of the woods yet and may still retest the 6,250 support, or worse, this downtrend could continue and we could still hit 6,150. Now, that said, the bulls are showing more resistance to further declines in the past 2 weeks compared to previous troughs, which is a positive sign. Now, a closer look at the index component shows some support forming. Let's look at AC, right? Some support forming for AC. But SM, however, being the index heavyweight, dragged the PSEi down last Friday after dropping 1.7%. ICT, another index heavyweight, fell 1.2% last Friday, reflecting some technical weakness over the past few weeks. Now, BDO, also an index heavyweight, suffered a 4.8% drop on Friday, while BPI was able to rebound to 124. Hopefully, this could form an inverse head and shoulders pattern and we could see a reversal for BPI. We'll see, right? Time will tell. Meanwhile, another index heavyweight, SMPH performance remains dismal. No light at the end of the tunnel for the index stocks. So this week, non-index stocks will likely be the focus again. With the potential dollar weakness, what usually benefits gold? Like gold rallied to 2,780, and along with it, of course, Apex Mining also rallying back to the 4 peso level. Philex Mining may also see some tailwinds, especially as they begin their Silangan mine operations. A clear pattern is currently emerging in the Philippine markets. If we look at the defensives, right, we have AP, we have Manila Water, we have Meralco, we have Globe, we have Tel, continuing to perform well, while Converge, now back at 17 pesos. This could actually offer a good buying opportunity if this support retest holds. So watch out for this on Monday. The news is out. It's official. AREIT and China Bank added to the index, while Nickel and Wilcon removed from the index. Now, if you were expecting any price movements on these issues, Well, you know, this is one of the worst kept secrets in the Philippine markets. But the change will take effect on February 3, and usually some of these index inclusions do result into some sell-on news action. We may actually finally see a bounce on Wilcon. So watch out for that. This week, the US Fed rate decision will be on Wednesday, but it will be Thursday morning here in Manila. Philippine GDP growth rate full year will be announced on Thursday also, with a forecast of 5.7%, which is lower than the 6% target. US advanced GDP numbers quarter on quarter will also be reported in the evening. PPI numbers on Friday morning, as well as the all-important core PCE numbers in the US will be reported before the markets open. Now we wonder, with the Fed meeting coming up, how they will react to Trump's demands at the World Economic Forum in Davos, where he pressured the Fed to cut rates, claiming that he knows monetary policy more than him. We all know who Trump was referring to when he said, "I know monetary policy more than him." But despite these pronouncements, probabilities for a rate cut is still no earlier than June Fed meeting. This week will be the heaviest earnings week. Look at the Wednesday schedule here. We will have the Fed rate announcement. Then Tesla, Microsoft, Meta, Lam Research, all reporting after the market close. Then the next day we have Comcast, MasterCard, Visa, Intel, Apple also reporting. So it is going to be a very busy earnings week. This week will be a shortened trading week for the Philippine markets as we celebrate the Chinese New Year. Let's take a look at the China markets, right? Because last year we also featured the China markets. We said that the China markets had a lot of potential. It might have bottomed last year. And if you look at my previous episodes, I mentioned that I was holding certain China stocks like Alibaba, Tencent, even Xiaomi. I was also holding some China ETFs. If you read through most of the news about China, it all says that China is uninvestable even after 2025 now. And really, people, investors, have been avoiding the Chinese markets like the plague. But really, nobody's talking about this, right? My FXI ETF, which is the China Big Cap Index, actually outperformed the S&P 500. If we look at the performance in the last 12 months, the FXI grew by 38% versus the S&P 500's 25.78%. The Chinese Nasdaq, the CQQQ, also performed well, 25.41% compared to the Nasdaq at 25.78%. Now, if China was uninvestable and can still manage to outperform the S&P 500, now imagine if they become investable. So maybe something you want to consider now if you have access to these markets. No, don't count China out. As we enter this week, the Chinese New Year will be on Wednesday. It will be a holiday, so there will be no trading midweek. Now, let's talk about something light, and this is just for fun, guys. There's an interesting concept that Eastern markets also look at. It's called the Flying Star System. This refers to Feng Shui periods, which changes every 20 years according to the Flying Star System. Now, these periods do tend to influence global trends and can directly align with stock market behavior. I want to focus specifically on the recent periods, right? Period 7, 8, and 9, and their characteristics as well as their potential impact on the stock market. We are currently in period 9. Now, this is the last period after which it will be period 1 again. Now, this period began last February 2024, so last year. It is said that during the period of fire, this period, 2024 to 2043, industries associated with the fire element, right? Anything that runs on electricity that can produce heat and light will benefit. Industries involved with high technology, artificial intelligence, right? Energy-related industries, gold, electric vehicles, Bitcoin, food industry, defense, military spending will benefit during the period 9. Think NVIDIA, ChatGPT. But what about China and its push for EVs? Could China potentially lead the renewable energy space in the next 20 years? Now, looking back Period 8 is the Earth period, which covers 2004 to 2023. And guess which industry surged in the last 20 years? It's the real estate industry. Technology and e-commerce also played a big role last period. Think about it. The Chinese economy was largely driven by their real estate expansion. Now, even here in the Philippines, it's the real estate boom. Everybody was saying that there was a real estate bubble, but they've been saying that for the last 20 years, and that bubble hasn't burst. E-commerce, think about Lazada, think about Alibaba, think about Amazon. With the recent news about the condo oversupply, does it mean that because we are now in period 9, real estate companies will have a hard time? Not necessarily, right? Now, remember that earth is a byproduct of fire. When something burns, it becomes ash, it becomes earth again. So, I mean, real estate industries are still okay, but they will not perform as well as the fire industries. In period 7, this is the metal period, that is 1984 to 2003. If you can think back, what happened during those times? The associated energies there, innovation, communication, and wealth through networking. This is not multi-level networking, guys, right? It's networking through connections, putting people together, putting businesses together. So what industries benefited during those times, right? Internet, right? Connections. How about Amazon, right? The Amazon marketplace, putting different vendors in a big marketplace. SM, the first SM Super Mall opened in 1985 in North EDSA. One big building putting different vendors together. Networking, communication in terms of the internet, Yahoo, Nokia, Netscape, Globe, Smart, PLDT. If you think about it, let's use SM as an example. SM started super malls, again, 1985, putting vendors together. But in 2004 to 2023, SM pivoted into something more like a real estate company with the development of SMDC. They entered into mall operations, building malls, buying land, developing office and residential buildings. What do you think SM's play is in period 9, where renewable energy, AI, and ESG initiatives are at play? Could this be the start of SMIC's renewable energy play? Just, again, this is just for fun, right, guys? So, because, you know, if these concepts were this simple, everybody will be billionaires right now, right? So, I hope we had some fun today with some little trivia. And as we celebrate the Chinese New Year, another fun fact for you guys. If you hear the phrases Kung Si Fa Chai or Kong Hei Fat Choi, that doesn't mean Chinese New Year. That is not the Chinese phrase for Happy New Year. Now, the literal translation for Kung Si Fa Chai is, Kung Si is congratulations, Fa Chai means I wish you wealth and prosperity. In layman's terms, what you're actually saying when you say Kong Hei Fat Choi or Kung Si Fa Chai is, congratulations, I hope you become rich. So, I'd like to greet you a happy Chinese New Year. Kung Si Fa Chai, I hope you become rich. So, that's it for this week. Please like this video if you found the information useful and fun. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week.